Maybe for some, probably not for many. But let's have a look. Markets down pretty hard today. Aggressive volatility on the day. This is going to be a pretty interesting 40 minutes. So I'm just going to post a note here in Telegram. Everyone is welcome to join. You go in here to live now. Nvidia beats, futures rip, immediate rug pull, and aggressive dump today. Price still holding above October 10th low, which is important. Closing bell session live now. Let's see how the trades settle for the day. Okay, so I'll be watching this stuff. We're trading at 65.87. We're coming in late into the day. Here's an 80. This is up 50 bucks. This is probably one that I should close out. I've got some risk on this one. I'm gonna try to close this one out for let's see if I get 50 bucks of this. So 125, close it for 75, hopefully. Let's go 75. Let's see here. I guess technically a dollar is not too bad. It is a butterfly. I mean, I'm about 7 points clear, and I'm gonna try to get a buck. That gives me $50 profit if I close it. I'm gonna let that one hang out for like a $50 winner. And it's because I got filled at a dollar, and actually it was 50 cents and $2. So my net is $1.25 on two contracts. Let me see. Maybe I just get out of this one for. We're 84. I mean, the pin price is technically 80. I'm playing with fire here. I don't know. That's going to be an interesting close. So what we are seeing here, I think that NVIDIA just pretty much pulled the rug. It wasn't NVIDIA. It was obviously like market forces, right? So we did a lot of calculations today. Here's my daily profit play. Here is the the intra-week volatility. Monday, big nothing burger till late in the day. Tuesday, total chop. Wednesday, total chop. Thursday, ridiculous. Literally it was like futures up 1.5%. Market opens up about 1.5, 1.6. And look at this thing. Opened up 1.6% higher, goes up to about 1.9 and just completely dumps. Crazy. So VIX, just a total whipsaw. VIX was opening around 21, came down to 19 and change, and just completely flew for the day. Like we went up 45% on the VIX today. Intraday, you don't see that a lot. So the day isn't done. I've got a couple profit traps. Let's see if I get lucky. Ideally, I've got some profit traps at 80 and 60 and the 6,600 handle. So we'll see where cash kind of settles on the day. I have this like long shot iron fly that's it's only 25 wide, but we'd have to do like a total dump for the rest of the day. So this one has potential. This one has potential. This one has potential. This one I'm probably going to take a full loss on. It's only going to save me about 25 bucks right now. So there's not much to do to mitigate the risk. This one is flat, but I'm only risking 35 bucks on it anyway. So this one's probably just going to settle flat. So like I said, I can get some decent profit around 80, decent profit around 65, 60, or I can get decent profit around 6,600. So I have three opportunities between 60, 80, and 6,600, plus or minus, 5, 10 points on those strikes to potentially pull in, some bonus traps here and maybe end up winning the day. So pretty crazy stuff. But the day was exactly that. It was a pretty crazy day. VIX at 25. I mean, I'd like to see the VIX kind of settle in a little bit lower for the day, see if we can get up to like 6,690, 6,600. That would be ideal. That way I can turn the butterflies into winners and get a profit trap around 6,600. But, I'm going to sit here and ride this thing out to the close. I'll tell you exactly where I'm at the end of the day, whether I make money or lose money. So I did take a loss this morning on daily profit play. My max risk was $4. I lost three, so I took a $300 loss. Now my job is to try to get some of that back and either wash some of that risk or even come out ahead with some profit. So I just wrapped up a nice masterclass on my daily profit play. We had two masterclasses this week. I'm sure some of you that are watching are in my masterclass, and we had a great 2-day session. We took a lot of notes. Um, it's funny, like we're going to learn from a day like this. I mean, I saw this. It was like somebody came into the session like, "What did we do wrong? What happened to today's trade?" I'm like, "We didn't do anything wrong." That's the crazy part is the stuff that I trade for daily profit play. It's very mechanical and it's very systematic. And we didn't do anything wrong, but price had a very outlier type day. This is not what price was expected to do. This is not what price typically does. I mean, we went from a 100% ATR all the way down to a 75% ATR. I mean, that is a monster swing. So basically, price action wise, I mean, brokers had about a plus or minus 50 on the day, and that was based on the open, right? So it's interesting. Like, if you remember with me this morning, if you're in daily profit play, we were looking at like a plus 85 before the market opened, and we've already gone. There's 91 points. So are we going to kind of do that like, 85 to 90 and stay there for the day and then it goes back up? Maybe. I don't know. Okay. Um, we'll see. But there's no real good way to calculate like how this thing did outside of the VIX was absolutely nuts today. And it's tough to do anything right when the VIX is going up 45%. So I'm not. And the crazy part is look at the SPY. I talked about this during my last live session. I mean, it's not the exact same thing, but it's eerily close to have the high from October 10th be exactly where the market tested and failed today. And then we have the October 10th low, and it's kind of where the market tested and is sitting, possibly, hopefully, failing off the low as well. So you talk about ridiculous volatility. This is also why I said if you watched my video yesterday, how many of you checked out my video in Discord or in Telegram or on YouTube or on Twitter? So the video I did yesterday, I posted it, and I also, if you follow me on TradingView, I posted it there as well. So I put here, I labeled it NVIDIA earnings. Let's see here. NVIDIA earnings, FOMC minutes, US non-farm. Oh my, because all that stuff came today, right? So NVIDIA earnings, they beat the EPS and revenue estimates, and the market was up all night. So futures was up like over 1%. We opened up 1.6% higher today. FOMC minutes were yesterday. Not really. It was kind of a nothing burger in the afternoon. Non-farm came out today and beat expectations. What it did do that maybe the market didn't love is it increased the probability of a pause. I don't think this is the exclusive reason that the market is falling. I think there's way more to it. I don't think that the Fed pausing in December really matters. I think the Fed turns around and probably cuts in 2026 anyway. So this is just a pause and a wait and see. And then we, of course, see what happens in 2026. So if the markets are falling off a cliff, the Fed is probably going to start cutting aggressively. And honestly, if it gets nasty enough in the next couple of weeks before we come into this December 10th meeting, this also might shift back down and favor a rate cut in December. I don't know. Okay, I'm going to take a look at Trueflation here for a moment and see if we have some slightly higher. I mean, this has gone down. So Trueflation, and again, this is third party. I wish the Fed watched this stuff, but they don't. We have our government ways of calculating inflation with CPI and PPI, which basically exclude food and energy. That's our core. But we went from a August low, okay, ticking higher all the way to the peak here in November, just the last couple of weeks, 2.71. But now we're down to 2.42. So we're getting some deflationary pressure, which, I know the Fed is cutting rates not because of inflation, but they're cutting rates because of a weakening labor market. But today we just had the non-farm news that came out. Non-farm payroll forecasted 53, came in 119. The revision was not great. The revision was 22 down to -4, so that kind of sucks. But the unemployment rate did go up slightly. 4.3 was previous, went up to 4.4. We know that historically the data is showing we're very, very low in unemployment rate, but it was a decent bump in jobs numbers. But we don't know the full picture. We don't know the full story because we don't know October yet. This was a September release that we're going to have to wait for the October release into December. So there's more like lagging jobs data that the market's going to have to kind of piece together here in the next couple of weeks. Next week is holiday disrupted with Thanksgiving on Thursday. So I look, I'd say like buckle up for some, interesting volatility, some crazy volatility maybe. But if the market can defend itself off of this level here, I think that's important. If the market can defend off this October 10th low and not do too much damage, and I've said this for a while, right? Like this October 10th candle, as soon as it happened and we were hitting all-time highs, we started to roll over. I said, this has to hold. If it doesn't hold, it is just too easy for the market to dump from the 100 to the 144 to the 200. That would be my next dip. If I'm going to participate in some short-term bullishness, it would be basically at this low or at the 200-day moving average and see if these levels hold into the end of the year. Okay. Because what might happen is we just have like head spinning volatility. The market is here. We're no better off than just a wild and crazy chop fest. Maybe it's this, right? I don't know. And maybe we hold this level here and we go up next week and we're just in the middle of all this junk. So we have a major low here, we have a high here, and we're just trading right back in the middle next week. I don't know. But it was a crazy day in the markets. And so as this is coming into a close, we have 30 minutes left. We're at 77. So that gives me profit trap potential in here. But I won't really know this until the final probably 15 minutes or so. So I'm going to have to sit on this for another like 10 to 15 minutes, maybe 18 minutes, and then kind of assess this at 345 or 350 and see if these are profit traps I can close out and protect. This one's looking pretty good, but again, 60 is my pin price. 80 is my pin price. I'd love a push above 80. 80 would feel pretty good. So between 80 and 60, it's like right there is 250. That's $350. That would actually net me some profit on the day, despite losing daily profit play. I'd be okay with that. So we'll see. All right. At the money, iron flies, SPX 50 wide, 3 lots, $150 profit trade to close my 7th trade. At the money, iron flies. Good. I mean, that's awesome, Mark. I'm guessing that you got into iron flies like after everything kind of fell, or you're willing to pay a pretty decent amount. I mean, an iron fly 50 wide, you're going to take some risk there, but you're going after, what's your profit target? You're going after like 10% winners, 15% winners. You're just kind of churning and burning. Either way, man, that's good. Good stuff. Okay. So that's a rat. October 10th candle. Here it is. For a split second, we were above the 50-day moving average, but you can see that clearly the bears have taken it over and the bulls have failed to recapture. It isn't a good look, right? Like technically speaking, it's not a good look for the market right now to have today's candle aggressively back below the 50-day as we close out the week. Friday. I mean, if there's another aggressive dump tomorrow, we're in some trouble. I'd say this market is going to roll over much, much, much harder. If we get another follow-through candle tomorrow, we'll see what happens. But if it just holds and we hold that October 10th low and it bounces, we're just trading a bunch of indecision as we go into the holidays next week. Okay, so that's SPY. QQQs, very similar. NVIDIA allowed it to gap higher. We were up above this, and it was funny. I was on a live session this morning, and I said, it's crazy. We could gap up here and have like a 1% buffer. Well, it doesn't matter when the price action today is open, and the S&P is, I mean, this is a Qs candle that's down 3.77% intraday. Now, the measured move from the actual, like what you're going to see on the tape is, shows the Nasdaq down 1.85 because this was the close yesterday, and there's your 1.9%. But the intraday candle is just a monster. And again, eerily similar, where you have the high from October 10th and you have the low from October 10th, and it's pretty much the exact same structure. So kind of crazy. This was a, Trump news, and this is NVIDIA. Let's say it's the rug pull. Let's take a look at the heat map. I'm pretty sure it's awful. I want to say, tech for the most part, look at XLK. Just absolutely getting smoked today. From the intraday candle, high to low, tech's down almost 5% on the day. That is definitely what feels like deleveraging to me. You look at mags, same thing. There's your October 10th candle. I mean, the structure is really interesting. And then intraday, mags is down about 3.8%. So individually, Apple down, Amazon down, AVGO down, Google down, despite hitting all-time highs yesterday and today. Meta down. I mean, Meta started up at 603. It's down. Microsoft down. Netflix down. Nvidia, what we thought could save it. I mean, what's crazy is this is what I thought would happen is either this is a big nothing burger or it's going to be like winners and losers both ways. If you were long Nvidia this morning, you had a brief moment to take some profit because this thing gapped up to about 196. Yesterday around the close, 186. It was about a $7. I'm gonna do the math here. So 186 was the close. 780 was your cost of a call option. Break even on that call option would be about 193.80. You had a sliver of profit this morning if you protected it at the open, right? So either buyers, aggressively took profit on that and then either de-risked and de-leveraged, or you just hold it and you're going to lose on both sides of this because more than likely the exceeding the market maker move in the upside isn't happening. And right now exceeding the market maker move to the downside isn't happening. And if this just goes, down for the day and then ends up going right back to the middle, everyone loses. Everyone that's long, everyone that's short, everyone loses. And that could be where this whole thing settles. So we shall see. All right, what else? That's Mag 7 stuff. Take a look at currency strength. Dollar index still catching a bid for the last 4 or 5 days. Dollar or currency strength. So pound on top today. In New Zealand was strong. I grabbed a quick profit on New Zealand CAD this morning. Pound on top, Swiss and dollar, euro. What's funny is, as crazy as the equities market was today, very contained price action in currencies. 50 on the high side with the Kiwi only. I mean, we didn't have any like blow up currencies trading. You don't really see this obvious reflection of risk off trading in currencies. So surprisingly, like very tight price action in currencies today. That could change tomorrow, but still like interesting price action. Oil, slowly slipping a little bit lower. Pretty good support around $55 and $56. I still have my futures trade that is a pin at 50. That's safe for $220, but I've got a profit trap there. That's CL, and that's a December expiration. So as long as we're not breaking below 50, you can see that chart alarm. We'd have to drop pretty aggressively if that's the case. All right, we got 22 minutes left. Come on, man. Give us a little bit of a. If we're going to retest the lows for the day, that is totally fine, but I'd like to see it retest and work its way back up if possible. I really, my least favorite 0DT days are when we are at lows and we close at the lows. So I want to see if there's any type of give and any type of bounce or rejection off of a 55 or 50 low here into the close. So honestly, like a lot can happen in the next 22 minutes. Oops. Fudge. That was a $50 risk. So broken wing, fly, broken wing. All right. We're about to see. Hopefully we get a bounce off of 50. 50 is the October 10th candle. It'd be nice to see some intraday price action closing off that level. I'd love like a 20 point push. 30 points would be better. 80 or higher is kind of my wish list. If we get to 65, 80, that'd be sweet. Crowd's still bearish. Yeah, I mean, I just think it's a fake out, man. I think the crowd, looks like they're getting rewarded right now, but I think it's a rug pull. I think it's a fake out. This is why. I mean, I literally did a video on this week. That's my Trade View YouTube. I posted that video. If you go to SPX, look, I could see the market. Just take a look at this stuff, right? Go from this low to high. I know my charts are messy, but go to this low. Okay, this April low, and take us to the high. And where's the 200-day moving average? Okay, so if you drag it all the way to the tippy top, here's a 236 pullback. Here's a 30. Here's a 38%. Okay, this market could get a little dicey to the downside, and the bears would feel like they are winning. Okay, But if the bears are winning and there is dynamic support in these moving averages, somewhere in here, for example, or at this previous high to become support, either this bounce or this bounce, the bears that are now like loading up on hedges are going to just spend way more money on loading up on those hedges. And then the market flips right back and comes back to like a halfway point. So I could see the market going both ways. Like I would find it, I'd be more surprised to see the bears rewarded. Okay. I mean, still, yes, the bear camp is high. They did retreat a little bit. The neutral camp climbed about 4%. This is almost it's 4.7%, but bears retreated by about 6%. And the bulls were up 1%, but the neutral camp is where, it's just money sitting on the sidelines right now. 48. Oh my God, dude. Fresh lows on the day, 20 minutes to go. What a piece of shit market today. 20. I mean, we're not at highs in the VIX. Highs at 28. I'm gonna go 28.24. 28.24. 1.76. This might be a 30. If it's gonna push, I mean, we might drop to 30 today. So close yesterday, 1.76. Puts us around 65.26. All right. Do I get a couple more bucks here out of this iron fly? It's going to be close. I mean, this thing's 25 wide. Come on. Should I grab $100 out of this? It's going to ease a little bit of the pain, but not a bunch. I've got some butterflies that take on some more risk. Come on. All right, let's see if I can close this out for $1. That trade was in for $24.50. I mean, it's such low risk. It's like, I don't even know why I'm closing it. I'm risking $50 to make $2,400. I don't even know why I'm closing this trade. Because it could easily turn to zero. That's why I'm like, oh, I'm up $100, but it's probably better just to let it run. It's just going to be tough to get down to like 65.25 in the next, 20 minutes. All right, what else? Yep, I saw that. So sentiment, yes, still bearish. The bears retreated a little bit, but it's still definitely elevated from historical norms. I mean, the average bearish AAI is like 31%. So historical average is 31%. We've been way bearish for way longer. And again, I find it hard to like reward. MCHP just hit profit, by the way. That was a pinch point. He's got something good happening today. MCHP 276. Closed out for 386. So that's 110. What? Equals 110. Okay, 40% winner hit on MCHP. Update for pinch point. Where are we at? Pinch. Trade 55, MCHP. Profit target hit. Entry 2.76. Close 3.86. Okay, trade updated there. Let's see here. Anything to do on the 950? No, it's $50 risk. Nothing to do on it. We're way off the profit target for that 950 risk, right? That 950 trade was on the upside. I mean, there's nothing to do. It's down $50. So accept that as a low risk. I'm trying to figure out if I can get something as a winner in here. Even my broken wings might get busted up a little bit unless we can get a surprise move back up to 60, 70, or 80. I'm taking on some some additional heat for the day. Would you euro dollar, most technical based currency? I mean, dollar index still has room to run. I mean, if we have risk off trading, dollar index has room to run. I've got my 102 handle right here. I mean, this is a critical spot to see if the dollar is going to go. If we have risk off trading, dollar gets stronger, equities market sells off more. So I think there is a potential squeeze on the dollar to 102. I wouldn't just automatically assume we're going to short the dollar at 102. I would say if you want to short the dollar, wait for that trend line to break. And that is the same thing if you flip the euro dollar. You want to wait for this trend line to break if you want to get long euro dollar. If you want to get long euro dollar, there's your trend line. If you go too sharply, that trend line's already broken. So I would go from this high, this high, this high, mark it that way, and see if this, if the dollar index breaks back down, then the euro dollar will likely break and go back up to the highs. Okay. I mean, the day itself, I mean, it's just a risk off day. And I think this is the market's way of saying that it is deleveraging and de-risking. I mean, Mag 7, this is a needed rotation. It's too concentrated. NVIDIA did pop. I mean, you can grasp it whatever you want today. Bottom line is price matters. SPX 315, the hell was that? Oh, that's a waterfall trade that we called. All right. That's interesting. I wasn't expecting that today. Waterfall. That was a 65.45. Trade number 118 just got filled. Okay. So we paid $3.15 for it. We have a $1.85 profit. We need to see if by December 19th, price gets back above 65.50. We'll find out. So I'll update that in class right now. Waterfall. Trade 118. A 12/19 expiration. 6545. 6550. 315 debit. Okay, trades in. All right, 42. So this is here for waterfall. This is a strategy 1 trade. All right, either this is the most disappointing 12 minutes to go or something exciting happens. Ideally, I don't know. Are we going to drop another 20 points? Maybe. I kind of want it to at this point. I'm close enough where this trade offers me $2,400.50 a profit or $24.50 in profit, but I need price to get down inside the 65.25. So either this dumps really hard by the end of the day, or we got to see like a screaming move back up to like 60, 70, 80, which both of those seem pretty unlikely, honestly. So might just be one of those days where it's tough to grind, unless you're Mark, who's just churning iron flies like a boss. So MP, to your question on why we lost, I think it was just the market's, kind of cynical timing of NVIDIA made everyone's hopes and dreams come true. And everyone thought the market was going to be saved by NVIDIA. And then just perfect timing to just pull the rug, de-risk, de-leverage. PTC, that was a pending order. I think that was a pinch point trade. PTC 250 debit got filled. Okay. It's final 10 minutes. Price is going to get pretty interesting. Let's see if the bulls just make this ridiculous rip. it could be a very lucky close to the day. We'll see. I'm going to keep an eye on this stuff. So can I close this guy out for a small winner? 24.50. Okay, where's my price at? Here we go. Watch this stuff live. Here we go. 46. Come on, baby. Can we squeeze to 60? A lucky profit trap would make me feel real nice today. Quang, these good levels to buy the. I mean, if you're doing defined risk, yes. If you're dollar cost averaging, yes. But I mean, I think the market could easily pull back 10%. So if you're going to wait a little bit longer, that 200 moving average is about a 9% correction. So here's your, SPY. If this thing's going to just find its way down here from the highs to the 200 moving average is a 9% correction. I could see us having that, like this type of price action, unless it literally stalls and goes right back up. If the bears are getting the upper hand right now, and we're going to test this October 10th candle and take it out, then that 200-day moving average and this previous high, those would be my two levels. If I'm looking at short-term levels, that level and that level would be where I would put in. I'd be willing to kind of throw a trade into the end of the year and see if the market can at least, hold for a little bit. Yep. But it'd be defined risk. No sense in taking on unnecessary risk. VIX, I'm curious. I'll just follow this for the day. Can I get out of here at break even? All right, I'm just going to accept the risk. We're at 44. Small risk there for 65 bucks. 60 would be great for a trap. It's not there yet. Might not get there. Broken wings, pain. Defense trades, pain. 7 minutes to go. All right. So net on the day, if we're going to close where we are right now, I'm going to lose about $785. Manageable, annoying, not ideal. If we somehow get like a magical squeeze up to like 60, 65, I might find myself in a profit trap, and that turns into actually a winner for the day. But I need a pretty magical 7 minutes here. Okay, Mark says just put on a credit spread at 65.30. All right, Mark's going for the win. Nice, dude. So we're below the October 10th low. Let's see where this market was closed to low, 1.68. So I said in the masterclass today, we had a measured move of about 1.76 at the VIX high. So the VIX high today was 28 point. I'll zoom in here and find the exact high. I think it was like 28.2 something. So VIX high at 28.27. Okay, 28.27. So 1.7%. Look at this. I'm just saying, like, I calculated this morning. The VIX is what caught me off guard. But I want you to see this measured move. Can everyone see this box from the close yesterday going down to 1.69%? The VIX level, the highest the VIX was today was a 1.7% expected move, and we got there to the tick, 1.7, 1.69. So that's the difference. The difference was I calculated based on a 21 VIX. I made the adjustment, but we ended up basically matching the close yesterday plus the VIX when the VIX was at its highest at 28 plus. Okay. All right, let's see what happens here. Broken wing. This one has some promise if we can squeeze up to 60. We have 5 minutes left. Come on, baby. Give us a freaking squeeze, would you? I did 27.27. Oh, 28, 27. So 1.76. At least that was enough to contain it. If you did 1.76, it would have contained the low. 1.76. That's what I calculated during class. So about a 65.27 low. Come on, man. Don't just sit at the lows all day. Get us to 60. All right, 4 minutes left. See where we settle. And as I'm watching that on the other screen, heat map for the day, 70% in red. Walmart getting some defensive love today. Consumer defensives. I mean, look at that. Ooh, baby. That's a big one from Walmart. It's so slippery. Like if I was just going to sell something at the money, but just I've already taken enough risk. I'm just curious. Come on, man. Highs were 53 in this last 5 minutes. Thought I was looking pretty good, honestly. I had lots and lots of profit traps in here. And I said, like, yeah, I get it. Like, if price slips through all of them, I'm toast. So 785 would be my loss on the day. It's manageable, not fun, but whatever. Let's see what happens. Quink says recently, whenever I entered a trade, I always get hit by anxiety attack. Normally, I'd be pretty calm, mapped out my plan, my risk reward. I mean, trade smaller. I don't know what else. I don't know what else you can possibly do. It's like if you place a trade and you're fearful. I mean, you got to trade smaller, man. You need to make the losses feel insignificant. Losses will happen. Losses will happen. You can do everything right and you can still lose. You know, there are bits and pieces of a rationale in this market that will make you lose. And so what you can't afford to do is like think that everything's great, trade too large, over leverage, think you got a sure thing. You don't. Like markets do crazy stuff. Days like today are absolutely crazy. This is an outlier type day, just like October 10th was, just like Jackson Hole was, just like April Liberation Day was. These are outlier days. So all you can do is manage your risk better, make the trades, make the risk feel less hurtful. Okay. 65, 35, 30 wide. Interesting mark. So 30 wide, 30 wide. Bro. I mean, Mark, if that thing slips like $4 to $5, dude, like you're going to take some risk on that, man. I mean, I don't know if you're just taking that trade and you're getting $3.50 to $4 credit. You better pin that thing like real close. If that's the trade you're doing. Son of a bee. That was not the plan today. Good Lord. I thought I had a pretty good profit trap in this area, and alas, I did not. So crazy. All right, well, that was unpleasant for me. $785 loss on the day. We'll come back and do it again tomorrow. But frustrating. I mean, good, dude. I don't know what you got filled on. I literally priced it out when you put it in the chat, and I saw like a 350, credit. So if you got more than that, great. But there you go. You did everything right, still lose. Yeah, it happens. So yeah, I mean, I was super active today, and I lost. I did everything from the beginning, very tactically. I lost. It's okay. But I knew also what I was putting on the table. I knew what my max risk was, and I'm okay. I'll survive. It was an annoying day. I can be annoyed at the market, but I'm going to turn around and trade tomorrow. So I know my little hole for the day is 785 for the week. That probably gave back some of it for daily profit at least. So I had, let's see, profit wise this week. When did we start this week trading? The 15th, 16th, 17th, 17th, 200, 100, 130. I mean, I gave it back. So 200, 100, 130, and then lost 785. Yeah, so I'm red for the week. It's all right. I'm not going to get it back in one trade. Maybe profit trap. But I got time. I've got survivability. But what a freaking day. It is, I'll tell you this, it is very difficult in a 0-day environment to see the market literally go, to the lows and close the lows for the day. That is really difficult. So unfortunately, good plan didn't work. We'll do it again tomorrow. And with the market makers kind of letting it rip today, if the VIX is going to go, and here's the reality: if the VIX is up to 28.30 tomorrow, then all plans out the window. But I would suspect that market makers, unless they want to take on like 2 ridiculous days in a row, they're probably going to button things up pretty quickly tomorrow and probably into next week. So we'll continue to kind of grind. I did, yeah. We look at currency strength. I said, surprisingly, with this much volatility in the equities market, that currencies are really quite boring. So I looked at DXY. I just was surprised that we only saw like a 50-50 on the vertical axis for currency strength. But overall, pretty contained. Yesterday, dollar was king. Today, it's kind of right in the middle with everything else. New Zealand had a big drop overnight from this. I mean, this is in the morning. This is 9:40. The Kiwi got a lot weaker. But yeah, I mean, not a ton of volatility despite the equities markets being really, really volatile today. So yeah, I looked at DXY, euro dollar, and this is a pretty key spot. If you expect to short the dollar, wait for that trend line to break. If you're long the dollar, I could see another squeeze. If we go up on the dollar, this would be risk off in the equities market. I think the dollar will continue to get risk. Dollar strength equals risk off trading. And if we get that, I could see us heading up to 102. And then from there, the question is, do we actually top out here and then roll over for a resumption of the bearish trend? That's the big difference. Okay. Let's see. That's DXY. Euro dollar, just flip it. So if you're going to get, long the euro dollar, wait for that trend line to break. If you're looking to stay short the euro dollar, entry stop loss above. If it proceeds lower, watch for this candle as a take profit. Maybe move your stop loss to break even. If it heads lower, there's just some good fib levels back here. 112 is a pretty good fib level for some profit. Where do you think we can head down to? I mean, if we're sitting, just below, I mean, technically with the close today, we took out the October 10th candle. Tomorrow's end of day is going to matter. Like if we have another just aggressive flush, this market might feel like it's in, free fall for a second. But I would look left, and there's 2 spots I think are really critical. You come back to the 200-day moving average, and the bullish posture still remains, and you come back to previous all-time highs. But this is a wait and see, right? So right now, below the 50-day is a indecision zone, and we have dynamic support at the 144-200. and you have the previous all-time highs right here. So, I think the market needed, I mean, look, after having like a nonstop run from low to high, this market needs a correction. It just feels unpleasant with how it always feels unpleasant, you know? So October 10th candle, a November 20th candle, they both suck because it's like, what a crazy day that was. It'd be one thing if like, day to day, the market just kind of slowly making its way lower. But when it all happens in one day, I mean, we started up, if you remember, 1.6% positive. That was up 1.9%. And we finished 1.5% lower. That is a ridiculous swing on the day. Okay. So Nasdaq was up, 1 point whatever 2+% for the day, and that's down 2.3 to close. Crazy. So that's the day, man. Like it's just a wild day. Literally the entire week of volatility was engulfed in one candle. We actually hit a fresh high for the week and we hit a fresh low for the week all today. Yeah. So what I'm saying is it's down 1.56, but that's based on the gap. That doesn't basically count for intraday pricing because we were up on the day 1.96%, and then we fell, almost 4%. This market fell almost 4%, 3.45. But the reading is like, sure, you closed yesterday, you're down 1.56%, but it's way more violent when you actually look at what actually happened today. So crazy stuff. All right. Well, that was not the most enjoyable close. I thought I'd get a little lucky on having some of my positions here. Profit traps. I didn't go low enough, and I just missed my. I mean, this trade down here was actually offering up about $2,500. It's like, well, I missed it. So I needed to go a little bit wider there and take on some more risk. But I was only risking. I mean, I was risking $50 to make $24.50. So yeah, maybe whatever. Annoying. I lose 785. Wipe some of the short-term profits for the week. We'll come back and do it again tomorrow. December cut. I mean, look at the Fed watch tool. All that matters is the Fed watch tool. Probabilities is did they change? They're changing as we speak. This was a 77% chance that they are going to pause. Now it is 60. So again, the market might very well pressure the Fed to cut. And this might switch where this goes up and they cut in December because the market is just absolutely getting its butt kicked. So I don't know. We might be talking about this next week and we're back at 50-50. So I would say right now, the market is kind of in jeopardy. It's like this pressure of the October 10th candle. There's a bit of pressure here. I think that the bears feel like they're winning right now, which is fine. But I have a difficult time siding with the bears when the sentiment is so bad. So I think that this is a potential move that sets things up for a aggressive rally. This could feel a lot like what we saw in July to August of 2024. Over the course of a couple of weeks, the market dropped 10%, and then we ripped up to highs. I'm not asking for the market to go to all-time highs again, but I'm wondering if any of this rally is going to find some dynamic support, right? So either our moving averages, and let's just say like the round number ish, about 10%, and the previous all-time high. Somewhere in this window is where the market may offer some support. Somewhere in here. But we'll figure it out. So all right, I'll let you go for today. Wish I had better news. Took a net loss on the day. Manageable, whatever. It sucks. I'm annoyed, but this is why I talk about trade size so aggressively all the time. And I probably bore you with it, but it's days like this where you respect the process, and I don't want to lose a lot of money. So, being down 785 is manageable. Give me 4 or 5, 6 days. I'll claw it back and be back in black, and we'll move on from there. But now day to day, let's see what market makers can do tomorrow. This is a big, clearly they were like rolling risk from the day. But I will say that the VIX does make things very difficult when the VIX goes from 19.5 to 28 plus. If we have another ridiculous move and the VIX is like up into the 30s, we're not calling the bottom tomorrow, right? Like that, it's ridiculous. I was surprised. I mean, I traded a little aggressively, like kind of calling some levels, and thought I had plenty of wiggle room, which I did not. Market surprised me to the downside by about 20 points. And that was enough to be not precise with my levels and cost me a bit more in risk. So December rate cut, up in the air. Right now, there's still a pause probability, but if the market dumps aggressively enough, it might force the Fed's hands. Either way, the Fed's going to probably cut early 2026 anyway. So I think this is just a way for the market to de-risk, de-leverage. Honestly, it's probably just going to clean out some of the loose hands and some of the leverage, and we'll find out if there's some dynamics in here. I don't think this is the everything bubble. I really don't. Too much at the top is still too strong. I don't see Nvidia as like a one-day move. It's like Nvidia is going to get cut in half. I mean, it's just a concentrated market, and so if you're going to rotate into defense or rotate into, I mean, what bonds do today? Is there any risk appetite? I mean, look at this crap. Bonds did nothing today. These aren't acting like safe havens. What gold do today? Nothing. Like this is de-risking. This is deleveraging. That's all this is. Gold's not reacting. Bonds aren't reacting. Yields aren't reacting. I mean, yields are down slightly. We're down like 6 bips. So this is just the equities market that's a little high in the valuations, a little, over leveraged, and the market needs a trim. So I think it's shortish term. I've got some good levels that I'm watching. I'm mindful. I don't think the market falls in a straight line ever. We've talked about this a lot in waterfall income. So we drop, let's say we drop 10%. Let's say we drop 10 to 15%. I think there's a reflexive rally coming from it. It may not get to all-time highs, but I think if we're down 10%, if we go 10% from the all-time highs and we go back up 7 or 8, guess what? There's plenty of profit in there over the next maybe 30 to 60 days if that's what we get. But if we, drop where we are, what are we at from all-time highs right now? From today's close, we are from all-time highs maybe 5 or 6% now? We're 5.5% from all-time highs. So it's funny how terrible it feels being 5% from the highs, and it's like, oh my God, this market's going to crumble. I don't know. I think this is a de-risking that needs to happen. We're not seeing it elsewhere. Like I said, bonds are barely catching a bid. Gold's not catching a bid. Like this was all equities deleveraging, in my opinion. Junk bonds, I mean, again, tight. Down, but not a blowout. Take a look at JNK. Not a blowout. Like, I mean, yeah, would I be concerned if all of a sudden we're seeing like JNK down here? Sure. Then credit spreads are widening. But if it's just like more chop and little tiny candles, it's not that. So I think this just is a nasty de-risking day, and the markets decided to do it during normal hours rather than gapping overnight. It did it during the day. So, all right, sounds good. I'll let you go for today. Come back and join me tomorrow. I'll be live. We'll focus on a good process for daily profit play, and hopefully, I mean, I want to have a winner tomorrow. I'm not going to double down. I'll stick to the process. It'd be nice to get a profit trap, sooner than later to kind of make up for a loss like today. Like one profit trap would have mitigated pretty much all the risk. So, something like that would be nice. But I'll just kind of keep throwing the nets out there and see if one sticks, and hopefully land a $500 to $1,000 profit trap, and then we're not complaining. So, all right, I'll let you go. Have a great rest of the day. Come back and join me tomorrow. Daily Profit Late in the morning, 9 a.m. Eastern Time. All are welcome. If you are in my Telegram, this will post in the morning, and you can join the link. Okay. We also go live on my Daily Profit Plan every morning. It's in Zoom. If you're in my Telegram, you get the Zoom session, and you can engage in the chat. But if you want to join on YouTube, it's live on youtube.com/financial wars. So we do both.